One of the common questions that we get from clients, captive clients, is at the end of the day, how much risk should the captive retain?
Hmm.
I guess that gets down to, I mean, you'll talk about a capital and surplus, but policy limits, just what are some general your thought process when you're advising people?
This question could be answered in a number of different ways depending on the situation of the client. But the general test that we do in a feasibility study, for example, is what policy limit can they set up and still reasonably expect to survive the next 5 years. So the way we test that is by running running simulations for the 5 years and estimating the probability of ruin. So if the probability of ruin gets too high, as in the probability that the company doesn't have enough money to cover potential losses, then the regulator is not going to approve it. So, for example, if we use property, if someone has a large building that's worth $100 million and they want to cover it in the captive, they probably can't get to a small enough probability of ruin. With the way the premiums might be really small, the capital requirement might be massive, because the regulator is going to say, I want to be 99% sure that you have enough money in this company to pay these losses if they happen. And so the 99th percentile of our simulations is what we'd have to use in that loss assumption in the adverse scenario. And if that 99th percentile is a $40 million, $70 million loss on their property, then they would have to have $70 million in capital, or capital plus premium. And that might not be feasible. And so they would probably want to buy reinsurance and have some other entity cover part of the risk, or they might want to keep some of the risk in the standard market. So questions like, how much risk should I put in the captive, is very situational. It really depends on what you have at risk and how well you can diversify it.
How often are you talking people out of putting risk in their captive?
Every day. It happens as often as putting them in. They'll say, well, what about my health insurance benefits? And I'll say, that depends. How many employees do you have? Right. And are you already self-insured for some layer of your health insurance risk? Or the property question will come up, and I'll say, well, how many properties do you have? And how diversified is the portfolio of properties? And how much of it do you want to take out of the standard market? If they want to take out all of it, I have to say, well, you can't do that until you've built up 100 million in capital.
I ask that because we get that all the time, because just a lot of times we're telling people, don't put this risk inside your captive. Penny wise and pound foolish.